Hey everyone, this is Garrett Goggin with Golden Portfolio. We're excited to bring you another interview with John DeLuce. He's CEO of Abitibi Metals. They're developing a copper gold project up in Canada. I've been following the company for a few months here. The company only trades for $32 million market cap. The grades of their B26 deposit are outstanding at what is it, 2.6% on a copper equivalent basis, or 2.9% on a copper equivalent basis. They currently hold about, well, 10 million, including indicated and inferred. They're starting to drill deeper. They've had very interesting results. The grades lead to a very economic deposit, but they need to increase their tonnage in order to get up to scale. But there's the opportunity, because once the high grade drilling results start, they usually continue. So, John, thank you for joining us today.
Thanks for having me.
No problem. So you just released drill results yesterday on B26.
Yeah, we released a visual update. We drilled some very deep holes, deeper holes, which was 1,450 meters to start the program. So those were very high impact holes. These are the deepest potential intercepts in the project's history. So we announced with 338 that we hit about an 85-meter zone, 50 meters that we believe will be high grade. And then we drilled a wedge off of that about 50 meters to the west, and that hit about a 55-meter zone with very, very strong levels of calco, but also within an area that we expect to see really good gold numbers. So we're excited about it. And really, with the strength and scale of this system in the Abitibi, this is still pretty shallow, overall shallow drilling for a potential underground model, and the size and scale of where we see this extending to depth.
So most of the extension you see at depth, but it also extends to the west as well.
Yeah, like when we were drilling in the first quarter, we really focused there around the first 300 meters vertical. We're starting this, it's trying to show the depth extent where we do see the potential to build quite a bit of tonnage at depth. So it's certainly still open at surface, and we're going to be drilling some near surface targets towards the end of the year. But really, we're trying to build up tonnage in both the shallow mid-range resource, which we now have two drills turning on, and then this deeper western plunging system, given that the historical operators really viewed this as a vertical deposit. So the significance of this is that we're showing a new model on how this is western plunging. And if successful, it really opens up the growth potential at the asset.
Excellent. That's interesting. One of the things that attracted me to your company, I run across a lot of interesting stories, a lot of high grade stuff, a lot of things trading at a discount, but, the insider ownership and the lack of dilution. Now, your company, the capital structure is extremely tight. There's only 110 million shares outstanding. How much do you own personally?
So I own 3 million shares.
Okay.
And the overall family owns 30%. We have over $3 million of our own capital in the company, including we put in another, I believe it was about $500,000 at the last financing in April. That was done at 42 cents a share.
And when you talk about your family, DeLuce family, right? Your dad started what, Porter Air?
My uncle did. So my uncle was the founder and is now the chairman, and my cousin Michael is now the CEO of Porter.
So this fits in within what, their family office portfolio?
So there's three streams. There's the airlines, which I'm less involved with. We have a real estate portfolio, which is probably that's where I have some involvement, and then our mining sector. So I lead the mining side. So we manage an equity portfolio, but really about five years ago when I was at EY in mining consulting, we were tired of getting burnt by some of the lifestyle companies, and we decided to take what was a successful 20 years in private mining development and build a company from scratch, which was Abitibi. So we've led by example, financing at every stage of the company and really positioning for what we believe is a company making asset at B26, which has never been in a public company until we announced the option with the Quebec government back in November of 2023.
So you're the company they built, you guys built mines privately for 20 years?
We were a private prospect generator, so we used our annual flow-through budget to develop grassroots to early stage opportunities. We then vended those to juniors. We helped finance. We were directors. We had multiple takeovers. We were one of the largest shareholders of Homer Gold that was taken over by Lakeshore and
Of
developed
what?
into a mine.
I'm sorry,
It
what
was
gold?
called the Homer Gold. It was in the
Okay.
West Timmins camp.
Okay.
It was taken over by Lakeshore and developed into a mine by Tony McCooch and Eric Kallio that were with
Yeah.
now latest known from Kirkland Lake Gold. Then we did a lot of work in the Windfall camp where a Cisco Metal or Cisco Mining was just taken over.
Yeah.
So we were strategic financiers, but this is really our flagship for this cycle to really combine our capital and expertise and contacts. Because we do believe that we're in the early stages of a very exciting mining market that we're getting into.
Yeah, you're speaking to me when you talk about lifestyle companies and you've invested in this sector for years. Because as we both know, you have good actors and bad actors in the sector, and the bad actors can take a good deposit and ruin it through dilution. And the good guys that are aligned with shareholders, they when the share price goes up, they benefit along with the shareholders. So they need to be aligned as you guys are. And that's one of the first things that I look at. And your 20 year of private mine development, you're looking at all these projects, and this is the one you chose to be your flagship to move forward with your next phase of, the mining business, right?
Yeah, exactly. You look across the junior mining sector, and only 10% maybe of these companies will have a successful project to sell to the majors.
Hmm.
So we were patient in trying to find that right opportunity because they are extremely hard to come by. And I won't have an opportunity like B26 again in my career unless I make a discovery somewhere, which is a tough thing to do. So really and with having a real asset that has the potential, you're able to attract a world-class team and the capital and the shareholder base. And that's what we've been able to do in a very short period of time. We announced this acquisition in November. We were the top performing Canadian junior mining stock of 2023. We raised $22 million in largely internally without an investment bank with no warrants in a tough market, headlined by Frank Giustra, Greg Shimandi, very successful mining entrepreneurs. So you can only do that with what I believe is a world-class asset. And then now we've been able to build a team around it that has had the success in building mines within the Abitibi. So we've really got the right ingredients to to put everybody in a position of success, and that's the biggest thing in this business. I can't guarantee that Abitibi is going to be a success, and any CEO that promises that, I would question their intentions. But what I can promise is we spend 16% of our annual budget in G&A, 84% into the ground. We have the technical expertise of some of the best people in the business. So we can say that we are really putting our shareholders and ourselves as the largest shareholders in the best position of success that we can in a marketplace that wants copper gold projects. There is very few polymetallics in Canada, especially of the grade and scale that we have at B26. So it's something that we're very excited about, and especially while copper starts to consolidate here, and which is just, I think, the tip of the iceberg and what is a very explosive copper and precious metal market, we're really in a good position being fully funded to the beginning of 2026 to be able to execute on our business plan and attract whether it's strategic investors down the road or really in a good position to get recognized in the market.
If you have any more strategic investors, is there going to be no shares left for retail? Because like 60% is locked up right now, right?
Well, I think we have seen liquidity in the stock. It has consolidated over the summer. We are trading at a discount to the April financing, although I do think that window will close as we start to release drill results and a potential resource update this fall. So when I talk strategic, my goal is to attract the investment of a major producer that's able to really help us validate the thesis that we're building at B26 and also be able to build B26 for our end goal of realizing a liquidity event alongside our shareholders. So I do think we do have good liquidity in the stock. I think we're probably one of the more liquid juniors in the market, trading roughly 4 to 500,000 shares per day across all markets. So certainly it is our goal to get more retail investment. We're at Beaver Creek. We're filling up our schedule with quality events that we can attend through the rest of the year and next year. Because really, I think we do have a product that stands out in the marketplace, and we have to get in front of the right people.
I totally agree with that. You spend most of your time, running the business, focusing on the deposit and not marketing versus, a lot of other companies where they spend 90% of their time marketing. They mine their investors instead of mining their deposits. How much did you pay for B26 initially? Was there a straight
So
transaction?
we financed a 7-year option in 5 months. So the option agreement is made up of 14.5 million in work commitment, 9.9% equity that is issued to essentially the Quebec government, 400,000 in cash, and the delivery of a PEA to complete the option agreement. So really, very well structured agreement. It's clear that I think the Quebec government, Smocom, really wants to see this developed into a mine and create jobs within the region. Really a win-win for all parties involved.
Yeah, excellent. I agree with that. What do you see as the main value drivers going forward for B26?
So I think certainly the copper price consolidating over the summer. We had a great run to $5. It's come down to 4 amongst a very quiet junior mining market over the summer, has led to a bit of a pullback in the stock. And we still have $50 million in the treasury. So we're trading at a Canadian EV of roughly about 25 million market cap, which I would say compared to our competitors is quite undervalued. But how are we going to try to make up that value gap? I think firstly, I've been able to build out our team within the technical and marketing so I can spend more time on the marketing side to really highlight the hard work that's going on at site. So I think the biggest catalyst is we've completed an internal resource update that we're looking to formalize in the short term. That will build on our thesis that we outlined to the market as there being an open pit potential of this asset instead of just the high-grade underground that was outlined in 2018. But also the 2018 resource was done at half of today's commodity prices, $1,200 gold, 5,500 per ton copper. So I think there's a valuation gap between where the resource was stated and where we are today. So we're working on that initiative. Number two, the high impact drilling. We mentioned a bit earlier in the conversation that we just finished 2 deeper holes. We now have 2 drills turning on the mid-resource growth target, which we see the potential to build quite a bit of tonnage and really duplicate the higher grade trends that we see in the first 300 meters vertical. So we will drill roughly 16,500 meters between now and Christmas. We're targeting the first set of drill results in the second half of October. But after that, we will have continuous drill results. And I appreciate the patience of our shareholders. As we started with 2 deeper holes, it has taken longer than the last program to produce results as a result of that. But now that we've got those out of the way, we're drilling mid-resource. We'll have probably drill results every 2 weeks between now all the way through to the new year. And then we're fully funded for another 20,000 meters of drilling next year. So really, we're in a great position in what is still a tough junior mining market where we're very well financed. We will own 80% of the B26 deposit at the end of next year. And we have a huge pipeline of catalysts. I'd say the third biggest catalyst is the B26 deposit is only a 1.6 kilometer strike of what is an 8.5 kilometer trend. We did a property-wide gravity survey. We're just about to commence a VTEM and EMT at the deposit. So we believe that there's a potential to make a discovery outside of the B26 footprint. So once we get all this geophysics completed, we will be drilling grassroots targets in December at the very latest in Q1 and really try to make a discovery outside of B26. And also we share the border with the historical Salbay mine, which produced 53 million tons of similar polymetallic material over 20 years. So we're looking to target some of these trends that cross over from the Sal Bay mine onto the B26 project. So, but maybe I'll pause there. But lots of catalysts, and again, fully financed, and at a valuation point at a discount of our last financing currently.
Yeah, Selby, they mine about 53 million tons, right? You guys hold a 11 million ton indicated and inferred right now. So, that it resides next door to you guys, so the potential's there for growing your resource, a good amount from here, right?
Exactly. And you look at the starting footprint, like this has really only
Oh,
been drilled with decent spacing down to 300 meters vertical. But SOCOM answered the important question of does this extend to depth? They drilled one hole down 800 meters vertical, which hit 5% copper equivalent over 7 meters. There was nothing around it for about 300 meters. So that's what we're doing now. We're taking the mid level down to about 1,000 meters vertical. We've placed some very strategic holes to help build meaningful tonnage between those levels. But really, you look at the strike length of 1.6 kilometers, you look at the strength of the alteration in the system, and these systems in the Abitibi of that starting size, the depth potential on these assets are quite significant. Some of the estimates that we see based on deposits studied in the Abitibi is you look at the strike length at surface, and you can usually count on it being about 3 times the depth potential. So that's you look at that and really it helps show why that this is a what we believe is a world-class opportunity. But it's our job now to build credibility up for what we believe is a 30 to 50 million ton target. And I think we'll be able to do that through drilling, through delivering on our modeling, and some of this deeper geophysics focused targeting.
how many tons per year was Selby operating at?
I believe they were operating between 2 to 3,000 per day, and that's what their tonnage per day was.
So only
Um,
2,000 to 3,000 tons per day.
yeah, it was smaller. They had an open pit similar to what we
Okay.
plan that ramped into underground. But again, this was their overall mine was more of a high grade versus some of these lower grade bulk tonnage and the larger mill sizes that you would see in like a porphyry.
Yeah, all right. Because yeah, I'm trying to model you guys, and I'm looking at 1,500 based off your 11 million tons right now. So it is going to remain relatively small of 2,000 to 3,000 tons per day. But the grade going through it is ridiculous, like
Yeah.
2.94 copper equivalent. The average the big 20,000 ton, 30,000 ton copper mine, they average like 0.6%, right? Copper equivalent.
Yeah, it's funny. It's funny the timing of your comment because it's an exercise that we're going through internally right now. So in some of our own modeling, we've modeled 2,000 ton per day. But the one thing that we're, as part of our internal resource exercise, is we're looking at the lower grade halo around this high grade core, and we are playing with different tonnage per day scenarios that we are processing more of this low grade to lower the potential strip ratio on a pit that's centered around these larger lower grade lenses. So it is an exercise that we are working through right now because on one thesis that we've run, that could we get this to 4 or 5,000 ton per day while processing low grade alongside the high grade. So it is something that we're still early in this assessment, but it is something that we're working through as well.
What would you estimate the CapEx difference between a 2.5K versus a 5K plant mill?
I think we're still early in that assessment. Think that certainly compared to a porphyry opportunity, this is a lot lower CapEx. We have a power line that runs through the property. We have a substation. We have all your access roads. So a lot of the really pricey, a lot of the costly endeavors that go into this have been covered. Now, we haven't covered everything. So I think it's a little bit too early for us to speculate on the CapEx, but certainly when we look at the high grade nature of it, and where we're situated in the Abitibi, I think it will end up being quite a good return overall.
And that high grade core with the lower grade halo that lends itself into like a staged approach. Rio 2, run by Alex Black, they Phoenix deposit in Chile, it's gold. They're operating at 20,000 tons per day, but it's going to scale to 80,000 tons per day. So it's a scaled
Mhm.
approach with limited capex up front. One of your competitors out there, what is it? Wallbridge, right?
Wallbridge, yeah.
CapEx on Fenelon, 645 mil, right? Project, it hasn't been advancing very quickly because, who's going to put up 645 mil to get, 100%? Putting up 645 to get 700 mil back basically right now. So like the 2.5 tons per day on high grade stuff, you're only putting up a few hundred mil to get a billion of value potentially. And then with that, you can use it to scale into the lower grade halo for more of a bulk mining approach. Am I thinking on the right ballpark?
Yeah, yeah, it's in the right ballpark. I think the uh you're like within an open pit scenario, as one of my advisors put it, you're having to mine that rock anyways. So especially while commodities are rising with the amount of credits that we have on this deposit, low grade is potentially economic rock that could help with the strip ratio and could help on the payback of that infrastructure before getting into the high grade underground. So we're still early on in that assessment. We certainly see a lot of resource upside before we go too far down the path of economics, but it's an important thing that we have to keep in mind as we present this to producers, as we present it to analysts. It's a common question that we do want to be able to outline a very strong case. But at the end of the day, one of our last deliverables is a PA. So we're not just growing the resource without considering the economics. But it's still, I guess, this summary would be is there's still a lot of upside on the resource before we know where those numbers will land.
Okay, so you're coming out with a new resource later this year?
That's what we're working on. So the timing is still to be determined. We're working through some of the additional modeling required. So it's definitely a priority. Final timing to be determined. But I'd say what we're excited to be delivering this month in October is drill results starting the second or third week of the month. So I think that's something we're going to be starting with the deeper holes drilled on the project. We do think that that could be meaningful, meaningful results based on what we've seen and released to the market visually. So it should be a good start to the program and then have pretty continuous batches of results after that.
Okay, excellent. And then in order to attract one of the major gold companies, they're looking for, 250,000 gold ounces per year at, lowest quartile all-in sustaining cost, stuff like that. So, you're drilling right now, you're increasing the resource to get you up to that stage.
Yeah, and I think it's also relative to our current market cap. I think for where we are
Yeah.
today versus our market cap, there's still a huge disconnect between what these are valued in the marketplace versus the size and then the upside that we're able to show. So I think there's a lot of ground that we need to make up just on what we have today. So that's where we got to get this out in front of the right people.
Yeah.
Retail is certainly a focus. Institutional is a focus as well because there is a big mandate for critical mineral exposure, especially in stable jurisdictions like Quebec with such great government, First Nation support, because half of the world copper supply is in areas of political instability. So I think assets like B26 will command a premium in the marketplace because a lot of the majors are looking to bring back production to less risky jurisdictions.
Yep, no doubt. And then it's interesting, right? You get the gold price ripping higher. Copper's done, well, it's leveling off here. But, their average retail investor that looks at gold, they're like, oh, it's too high. And then, yeah, I use the gold price to value these smaller companies. And the value is compelling, right? The higher gold goes, the more value is being created in a lot of these smaller mining companies that have assets that are worth $1 billion and growing higher that aren't appreciating with the gold price.
Yeah, well, I think the gold price at 2,700 now could be still very undervalued. The amount of monetary debasement that we've gone through over the last 5 years, we finally had a cut from the Fed in interest rate policy. But I do think that you look at the Dow versus the gold price, and the ratio still shows that the gold price is still quite undervalued as we start to get into another cutting cycle. And I think it's just a matter of time before there's money printing starts again. So I do think that we have a great setup for gold. I still think that there's a lot of room to go. And like even at B26, we're the first operator to model the gold on its own. So we do think that there's quite a bit of upside within the gold credit on the deposit. And that's certainly something that we're working on. And with the prior resource done at $1,200 gold, I think there's a lot of upside on that commodity. But I do think that in my view, there's still a lot of room to go on gold. I think this has been a spring that's been coupling back for a couple of years as we've sort of tested new highs, broken back down. People are still have high confidence in the US dollar, but I think we're getting to a point that gold can really perform here.
Yeah, every time the Fed cuts rates, gold doubles over the next 4 years. 2000, 2008, 2021. It just we're at the very beginning of it. But to be totally clear, right? B26, it's copper. It's got a gold credit. It's relatively small, right? 3%, 5% of revenue.
Yeah, the 2018 resource was 250,000 ounces. So it's not immaterial. We see the potential to grow the percentage of gold versus copper. It will certainly remain a copper-led deposit. But at the same time, you look at like the LaRonde mine owned by Agnico Eagle on the Cadillac break. And that's a polymetallic deposit. Some of their richest gold lenses started at 500 to 1,000 meters vertical. So we do believe that this is a large system, and maybe there's other gold rich, much higher gold rich parts of the system. So to say that certainly you're right, copper's a focus, but we have a system that has a lot of strength that we do think that we could have zones within that have a very material gold portion of it.
Yeah, good. I appreciate your time today, John.
Likewise, appreciate you having me.
That's good. Thank you for joining me. John DeLuce. It is Abitibi Metals. If you're interested, you can follow Golden Portfolio. Sign up for my Secrets of a Mining Analyst, and learn more about Abitibi Metals at the Golden Portfolio. So thank you, John. Keep up the good work.
Thank you.